Chris Hutchinson from Unicorn Asset Management, a long-standing VCT manager. You've spoke at our VCT Masterclass event this morning. Thank you very much for that. I just wanted to ask you, what are the sort of special features about the VCT structure that advisors should be aware of and thinking of as real benefits for their clients?
Well, first off, there are the tax benefits. Now, it is a technical structure. It does take a little bit of getting to know and understand. And I think it is not a product, clearly, that is for everyone. Apart from anything else, the 5-year holding rule is quite a commitment in terms of locking up your capital. So advisors, I think in the past, when VCTs had their first sort of flush of popularity, dived into them, and a lot of clients had a pretty difficult experience. The industry, the sector has matured considerably now, and really what advisors should be looking for is those managers that have been through both good times and bad times, delivered consistent dividends back to the shareholders in their VCT, and been able to generate some capital growth. And I think when you get that right, then suddenly all those tax benefits on top start to make the thing look very attractive indeed.
And you spoke in your presentation in quite some depth about the smaller company universe and the advantages of investing in smaller companies and the sort of results and performance that you can achieve. Do you just want to expand on that a little bit?
Yeah, AIM currently has over 1,000 companies listed on it. Many of those are pretty early stage. They may even be pre-revenue, let alone pre-profit. Those are definitely speculative micro-cap investments, some of which will do phenomenally well in terms of producing massive capital returns for investors. But for us, what we're looking for at Unicorn, candidates for inclusion in our AIM focused VCT, is an established track record, a proven management team, a business that is capable of generating sufficient cash to enable that management team to not only invest in their future growth plans, but also have a little bit left over to pay back to shareholders in that company by way of dividends. And if you can get that balance right in terms of generating some capital growth from the underlying investments that you've made in your portfolio, but increasingly building that income stream through dividends received from the underlying companies, then you have a really interesting proposition on your hands. And I think that's we're always looking for that. It's very selective. Typically, we run with about 50 holdings maximum in any of our portfolios. We've currently got about 52 qualifying companies in our VCT. And they have, each of them, been through substantial due diligence. And as I said in the talk I gave, being selective pays dividends in a real and in the other sense. It pays dividends to do the homework up front, be selective, and as I say, over time, that will really generate the returns.
And one final question: Do you feel that advisors have overlooked the VCT sector in the past, perhaps, and are they coming to it again today, perhaps with fresh eyes?
I think it's a great question. I think it's almost inevitably true that following the heyday of fundraising for AIM for VCTs back in the early 2000s, performance subsequently was pretty variable, and I think a lot of advisors ended up with a lot of pretty unhappy clients, really. And it was at a time when the VCT sector was immature, was still establishing itself, where the investment managers were going through the process of building out their portfolios. And so there was a lot of uncertainty, a lot of expectation, a lot of hope, and in reality, that hope wasn't actually delivered on. And I think now what you've got increasingly is investors looking to selectively discuss the merits of VCT investing to clients who really have the time and the ability and the sophistication to understand them, but also taking into account the changes to pension rules so that actually people are looking for tax efficient investments, they're looking for longer term tax planning, and I do believe that the VCT sector now, for those that have come through the tough times, actually have a genuine and really interesting proposition for a lot of clients.
Chris, thank you very much for your insights, and thank you for speaking today. Hopefully we'll see you at another event very soon. Thank you.
Pleasure. Thanks very much. Bye.